today, actually, we wanted to talk about the strategies that you can use on the market whenever it's falling or moving sideways or rising. So basically, what are the strategies that I personally use to identify perfect buy and sell opportunities on the market out there? Like basically, what are the indicators and some technical tools that I apply on the chart analysis, and what are the fundamental aspects to look at then you trying to figure out whether that's the best time to enter the market, or you'd rather wait for some time before you see more clarity on the market and more indicators that altogether combined show you a more clear picture out there. So yeah, let's check if the quality of stream is good. Yeah, it's exactly what I wanted it to be. Yeah, the sound is also good. Well, anyway, let's go. So let's actually go through the strategies that I use when it comes to figuring out whether it's time to enter the market, or you should wait for some time, or it's about actually time to exit the market. So I actually have like 10 strategies, no, actually 9 strategies active on Bitsgap, but that's not the one I use here. That's actually the one I use on another account, but right now I'm using this one for my futures trading experimental account. But yeah, well, actually I have 9 strategies on the other account anyway, and all of them are for the sideways market. So all 9 strategies that I have are for the sideways market and with the SBOT configuration. So as you know, the SBOT is basically the top one strategy to use for the sideways market. So what I mean by the sideways market, like if you look at the chart of Bitcoin, and let's say look at 2-hour chart, then it looks like a perfect sideways market as it moves right this, and you can say that it has a strong support line and it has a declining resistance line. So what you see here on the chart right now, it's a pretty common pattern known as the descending triangle. That's actually the one I have here for you, you see. So like from the books, it's supposed to look like this, right? So that's pretty much exactly that you see right now on the chart of Bitcoin. So if you check previous cases, then the same exact pattern was spotted. You would find that in most cases it did play as it's supposed to. Like you would see the price going higher after some period of consolidation, right? And the reasons why I also tend to think that eventually we will end up going more like this rather than falling further down is because I look at some other indicators as well, and also on the on-chain data that you can get on the Glassnode, for example. So on the Glassnode you can see things like basically the metrics and insights from the data flow, like the investment flow on the market, the net inflow to exchanges and out of exchanges. Basically right now we can see a sharp increase on the outflow of coins out of the exchanges, which basically indicates that it's a bullish signal when you see the outflow from the exchanges. Whereas when you see the inflow to exchanges that exceed the outflow, that basically means that traders and portfolio managers, they are trying to escape the market. They are trying to sell it in most cases. So right now we see the outflow, which is good, which is a bullish thing, and we can also see some other insights, like for example the accumulation of long-term holders. Like basically the data aggregates those big whale accounts that possess more than 10 bitcoins or something, and it analyzes their behavior on the market, and in cases then they tend to accumulate more, like what we see now on this sideways market. It is actually a bullish indicator, right? So the on-chain data indicates that there is a period of strong accumulation right now, and that, like, typically that means that the price should go higher eventually after the period of sideways market ends, right? But it does not necessarily mean that it's going to happen for sure, because you might see some really negative news, let's say tomorrow or the day after tomorrow, that's going to change the entire sentiment as we have of today, which is pretty much bullish. So it's going to change. It can change just in one day and go like this all the way down. But I do not actually think it's going to happen, and that's my personal opinion based on the experience that I got, the on-chain data that I have in my feed, as well as some indicators that I use. So you now see the descending triangle pattern. Also, I use the tool known as the volume profile. So the thing about the volume profile is that it basically, and by the way, that's the one I use, is for free. Like, you don't need to have any paid subscription plan or whatsoever. It's just like you go here, you select the fixed range volume profile. Okay, let's do this once again. And you just select the range you're interested in. So I'm interested in the volume traded from the beginning of the year until today. So as you can see, the most volume traded is exactly here at the price from the range of 30k up to 40k. And notice that this volume exactly corresponds with the previous accumulation phase that we had at this stage here, right? And the one that we have here. So it pretty much exactly corresponds with the support line that was formed before. And as far as the price of Bitcoin remains within this range of the most volume being traded, that's an okay scenario. Like, it pretty much tells us that it's nothing to worry as of now. Whereas if you would see the price of Bitcoin trading above of this red line, which is, by the way, where you got the most volume being traded, and that's exactly at the price of around 34k. So when you see the price of Bitcoin trading above this line, that's actually gives more confidence in the bullish sentiment. Whereas right now it's below, but it still stays within its boundaries, and you see that the price is now exactly at the bottom of the support line. So it's pretty much nothing to worry about yet. And in my opinion, it's not the financial advice or whatsoever, this current scenario that we see on the market is actually a perfect entry point for any trade you would like to have, whether that be the automated bot that you want to launch, let's say on Bitcoin to USDC, wherever. So the way I would set the bot is like this. So I would set my lower price around this area, right? So I just look at the previous price action points, and I would say that it's pretty much, this is the bottom that I would set, and the stop loss I would put somewhere below this area, yeah, maybe even a bit higher, yeah. So as you can see in this setup, if you enter this trade right now with this trading range and this distribution of your base and the what is that? Let's use 100 for example. Why not fixing it, man? What's the problem of yours? Oh yeah, because apparently I have no money on the spot market on this account. But well, anyway, let's say that's $1,000, and you can clearly see that's around 80% of your sell orders, right? And that's around 20% of your buy orders. and so 80% out of 1,000 is going to be what? Exactly 800 USDT. So as you enter this trade, you will be in the market, in the base currency, which is Bitcoin, worth $800, right? And if, like, the worst case scenario, what's going to happen is that the price falls, it executes all of these buy limit orders, right? So you end up having all $1,000 in Bitcoin, right? Because you executed all of these additional buy limit orders. So that's actually around $200 spent on Bitcoin, right? So that means that you're in the market exactly with the investment of $1,000, right? And now your stop loss is around this area. So let's see what's the distance from your entry price to that point. So that's around 10%, right? So it's pretty much that if the worst case scenario happens, it executes your all limit buy orders, and it even goes further way down, and it approaches your stop loss. It basically triggers it. That's gonna be a loss of around 9% because of the dollar cost averaging effect, right? And taking into account that the stop loss is around this area. So you, like the worst case scenario, you would expect to lose around $100 from this trading setup, which is relatively to the potential reward that you can get from this trade is a very low risk. And that's the justified entry, because your stop loss is so close to your entry price, and the potential of the price of bouncing off this support line and going further way up, like in this trading setup, I would expect it to bounce off this support line, which is around this area, and I would expect it to go like this, at least back to that point where we have the resistance. So that's the profit potential here for you guys, whereas the loss is limited just to 10%. Yeah, so the profit potential here is, I guess, around 30% or something, right? And plus expect the price to move like this, so it's gonna buy again, then it's gonna sell again. So in the long-term perspective, you can expect from this kind of setup around 30% per month. That's the approximation that I have for you based on the past results that I achieved using this strategy. So that's one way for you guys to trade. Like, look at those cases on the market where you see a strong support line and where you see the price trading now around the support line. Like, if you want to add even more confidence in that trade, no need to enter right now. Wait for the price to bounce off a bit, as a pretty much more, like, it adds more confidence. Like, as it bounced off the support line, most likely it's going to continue the rally, at least in the short-term perspective. So this is where you can enter as well. But in that case, your stop loss is going to be not 10%, but it's going to be around 20%. So that's the risk now you take. Okay, so it's always a trade-off between the risk you take, the market timing, and the profit potential, right? So in my opinion, it's more or less justified, I would say it's by 75% justified to enter the market now with this exact trading setup that I have for you. That's the as-bought strategy, because we know that the as-bought is the perfect one to trade on the sideways market. Basically makes you more money because of its investment distribution logic. So that's one way for you to trade. Let's check some other things we might have, like let's say BNB coin. So the thing about the BNB is that pretty much you can also say that you have the descending triangle, right? Well, don't look at this short squeezes. Pretty much consider this line to be the support, because it's never perfect in the technical analysis. Like, you won't see perfect lines like on this chart over here, right? So sometimes you need to forget about the noise, like this one. So that's like what I call as the noise. When you see this shadow from the candle, that means that the buying back pressure was strong enough, so it quickly purchased all this order book over here, which is good actually. Same pretty much here. So that's why you can kind of mimic this noise and say that your support line is pretty much higher. So that's where you get your ascending triangle. But apart from that, if you look at the long-term chart, then you could see that it pretty much bounces off this angled up support line. I've actually made the zone here. No, actually, let's use another one, maybe the rotated rectangle, maybe. I hope that's the tool I'm looking for. Oh yes, that's the one. So that's the, let's say that's the support area, right? So you can expect the price to, let's say, to fall back here and bounce off it, or you can expect the price to go here and bounce off it, or maybe you can expect it to go here and bounce off it. So that's like several possible scenarios out here. So in general, when you see the price approaching the support, then that's the time for you to get into the action. So as of now, I don't really think that's would be a wise idea to enter BNB, because it looks like it's about to revert from the resistance that is being formed here, right? But if it breaks it and it goes like this and forms this short-term sideways formation over here, then I would consider entering the market here. Or it can go lower from that point down to the support, or even lower, like in support area. So this is the zone where you can consider entering the BNB with your stop loss set below the support over here. So that's going to be your stop loss, right? So that's the thing. And I mean, you always need to monitor the price activity, because it always changes, and that means that some patterns are no longer valid and you need to look for new ones. You need to consider other things as well, like for this one I would also look at the volume profile. So the thing about the volume profile on BNB is that actually the price right now is above the point of interest, and the point of interest once again is exactly the price, and that's for Bitcoin, sorry, BNB, that's 271. That's exactly where we had the most volume being traded for this exact cryptocurrency pair. And since the current price is above this line, that's actually a bullish indicator, right? But you cannot rely on just one indicator, even though I prefer volume profile and the analysis of support and resistance lines over some other indicators. But it's always good to have a combination of indicators. Like, let's say you have the volume profile. Okay, it's pretty much bullish here, right? And we also have the support line in this area, if you forget about the noise over here. And you can spot the descending triangle pattern, right? So you would expect it to move like this. And you also have, well, that's what I have here, and that's the stochastic RSI. I would rather recommend you using the stochastic RSI, because compared with the ordinary RSI, it's more how to say, it's more magnified. So basically this stochastic RSI is nothing more than just the RSI of the RSI. So it's kind of using two loops, like two loops simultaneously, which is way better at that point. So that's, in that sense, like one of the best trading oscillators that you can find on the market, and that's the traditional indicator that typically stock traders, forex traders are using. So right now it shows us that we are in the overbought zone. Maybe let's switch to the 1 day, because the longer the time frame is, the better is the quality of the indicators, because they basically take more data to analyze and it looks more sharp. So here it looks like there was a point over here exactly where we reached the overbought zone, And typically when you reach the overbought zone, like here for example, you can see the price then falling down. It's pretty much that you tend to see. It's not necessarily all the time, and it never works 100%. Like if it would work each time, like you see the overbought and you say, okay, now is the time to sell, but it actually doesn't go, the price doesn't go down, it's okay, it's pretty much okay. But at least you can use it as an additional tool. And right now it tells us that yes, we reached this point of local overbought, and that you can at least expect a short-term sell-off down to the support, I guess. And once you will see the price forming another oversold, in that case scenario, like you said, you had it here, you had it here as well, then you can expect the price to go higher. So as of now, as I said, I would not enter BNB. I would rather wait either for the price. Let's use line again. I would rather wait for the price. Maybe let's actually, you can use like this. Pretty much. So I'd rather wait for the price to reach somewhere close to the support line here, and then I would see the RSI trading over that zone. So this would be the best time for me to enter it, because at that point I would set my stop loss around this area, and you would see that the distance from your entry price to the stop loss is actually a short one. So it's around, well, 13%, that's okay, right? But that's a justified entry in that case, where you have a limited risk, but the upside potential here is pretty much unlimited, right? So these are the kind of market scenarios I'm looking for when it comes to automated bots trading, right? Once again, it's not the financial advice or whatsoever, it's just the way I use it. And of course you can have your own strategies using some other tools, and they can be better maybe at some point, it can be worse at some point as well. But use the things that work for you the best way, right? So if you haven't come up with your strategy yet, you can use mine, for example, and see if it works for you. If it doesn't work for you, then you can look for some other strategies, because that's not the only one that I use, for example. There are some other strategies you can find, like pattern based as well, like this one, for example. But these are the things that you already have at Bitsgap. I wrote it back in like 2000. No, actually, yeah, I think a year ago. That's the time when I wrote about these strategies, and you can find them here in Trading Bot, and you can see you have it here, automated strategies. So these are some pattern-based strategies that you can use, guys, right? There are some additional tips and clues, like this one. Read carefully, and you can find some other trading setups as well. I think that, yeah, it's like the first part, but there should be the second part as well. So let's check it out. No, I cannot actually do this. Maybe let's go log. Yeah, exactly like this. Part 2. Yes, that's the part 2, you see. So in part 2 you have some other strategies as well. You see exact trading setups that I would rather use. Some tips, another strategy, and I mean guys, just use it, just grab it. That's there for free, and I mean you have everything at your disposal to test it. Like, you can literally trade in the demo mode, which is an absolutely risk-free trading simulator, right? So basically you are trading with your virtual money. So you can trade the strategy that I use on virtual money for some time. Let's say trade it for 2 months or something, and trade as many times as you want. Like whenever you spot some kind of these rare patterns on the cryptocurrencies other than Bitcoin, like maybe XRP, or I don't know, maybe you're trading Dogecoin, which I never trade actually, but you might be trading anyway. So lots of cryptocurrencies out there where you can spot some interesting market momentums and use these strategies, accumulate the results, and once you are satisfied with the overall result, then you can keep trading it, but on the real money now, right? If you feel like the results are not satisfactory for you, then look for some other strategies out there. Or maybe you're doing something wrong, like maybe you are setting your stop loss too far from the entry price, right? So in general, in this kind of strategy that I demonstrated, in most case scenario, the average distance, like the gap between the entry price and the stop loss, is around 10 to even 20% sometimes. But that's for me. I mean, I tolerate this kind of risk. That's pretty much fine, right? So never put all your money in one trade. I mean, let's have this kind of example. So let's say your total balance is, let's say, $1,000, right? So now is the time for you to figure out the diversification. And by diversification, I mean using several strategies. So the first one that you might use is automation. And you can allocate, let's say, 50% out of this total balance, and that's going to be what? $500, right? Exactly. So the second one can be smart trade, which is basically trading manually. Like you open the trade with one limit buy order, or you go straight with the market buy order, and then you set the take profit, the stop loss, like over here, like you go to trading. That's what I call the smart trading. Here you have everything under control on your own. That's a manual trade. You have take profit, you have stop loss. You can always change these things, right? Whereas in automation, everything works smoothly the way it should be and follows the algorithm, the built-in algorithm. So you cannot interact with this algorithm. You cannot destruct it, right? So that's why these are completely different strategies out there. So let's say for the smart trade, you're going to use 30% of your total balance, and that's exactly what? $300. Okay. And now the third one, it can be HODL. Like you just buy some coins and you let it be on your balance. So that's what? $200. Okay. So HODL strategy can bring you the most returns if you sell the coin at the right time, and if you are patient enough to wait for like half of a year, maybe a year, maybe sometimes it's 2 years. Like it's long-term perspective. Like those who are patient enough and believe in the fundamentals, they get rewarded the most. That's why, in my opinion, HODL is a strategy that you should use, but I would recommend allocating no more than 20%. If you want to be an active trader, then that's the strategy you would use. If you are not active trader, then you can set 40% on HODL and mitigate the percentage on other strategies. Okay, so that's the distribution you can have. So now we have for auto what? $500. Okay, so now it's the time for you to define how much you're gonna put into each strategy. So let's say you want to put 100 per each strategy, right? Knowing that the stop loss is around 10 to 20%, that means that the maximum that you can lose out of this trade is around $20. Well, actually less, because you have dollar cost averaging effect, so that's maybe around 17%. Maybe even less, because it can be that the board could potentially get some profits out of the market as the price was moving slowly down. And when it moves slowly down, it gives you the opportunities to still capture these small swings up and down. So that's when the bot can actually buy at the lowest and sell at the highest local price. That's basically, even if it falls, like you see on the chart, you zoom it out, you see the price falling. But actually, if you zoom it in, you would see the bot making some decent profits within this shortfall. So you end up losing not 20% as a result of the stop loss being triggered, but it can be around 30%. So it's never exactly 20% in this case. it's always like 17, it can be 15. So let's say 15, right? So you're gonna lose $15 out of this exact strategy. Let's assume you have all 5 strategies active, multiplied by $15, right? So the maximum you can lose in that case, that's $75, right? So you basically lose. Let's say you are bad at automation, like you are in streaming, unlucky. I mean, something went wrong, and you lost in all trades, and that's going to be exactly $75. But thanks to your skills in smart trading, here you made, let's say, $100, and in HODL you made $100 as well. So if you calculate all these things, $100 profit plus another $100 profit minus 75 of your loss from the automation, you still end up in the profit, right? So that's the thing. You get $125, which is to your 1,000 initial. That's exactly 12.5% of the return, right? So now I hope you understand the idea of diversification in trading. It's like the best way to achieve diversification is by having multiple strategies, because one strategy can mitigate the loss that you make on another strategy, because you can be successful in this strategy, in the second you can be losing money, in the third you can be maybe also making money or making zero at the time. So you can reach that point where actually one strategy mitigates, like it offsets the loss from the second strategy. So in the long-term perspective, the aim you should focus on is to diversify the best way for you. Like if you so you are playing with different strategies, let's say in the demo mode, and you feel like you get most of your returns out of the automation, then in that case you can start trading focusing on automation. Like start with maybe 60%, whatever, and see how it goes, like next couple of months. So if you feel like this ratio is good for you, stick with it. If you feel like you are losing too much, let's say in smart trade, but you actually make a pretty decent sum of money in automation and in HODL, then maybe it makes sense for you to spend less on smart trade, let's say 10%, and now focus more on automation and HODL. That's the thing, guys. I really want you to understand that there is no golden strategy on the market. It just depends on your skills, on your time availability, your emotional control, your patience, and the money you put into the market. So you need to play with this in a way that you have different strategies, and once you figure out which strategy brings you the most, focus on it more. That way you will end up having your own golden strategy. That's the key to success on the market. That's the risk management, and that's the proper strategy diversification. The best way to find your strategy is playing with the demo mode account, because here you lose no money, but you get experience, because you can analyze all the data you get from the trades you made. So let's say go to my futures account. Here we go. Futures right now in the loss actually, but let's check my overall performance, like from this time. So where's my result? What's the problem here, my friend? Let's reload then. I don't know why. Futures history should show me some. Yes, so here we go. Now let's change the dates. Okay, so you see I made $700 to my initial balance, which was around it was actually around $500 or something. So that's the profit I made so far. Yeah, and I can see here my worst trades. I can see my best trades, like for example this one. I made the most on Doji. Yeah, and that way when you get this analytics, you can analyze your trades and see where you made mistakes, why you made mistakes. Like, you can check if that was actually the right moment to enter the market. If it turns out to be the wrong time you enter the market, then you go back to the chart, you try to analyze it again and see what happened, what you might have forgotten to look at to get more insights before entering the market. So that way you learn how to basically create your ultimate strategy by analyzing the data, making sure you use the basic, which are like, not the basic, it's, I would say, fundamental risk management principles, like the diversification. So never put all your money in one strategy and all in one trade. So you see, that's always splitting your money, and by that way you split the risk. And not only like that, you also have the stop loss, which is another tool to use to even mitigate your losses further. And that way you achieve the best from the market. You can make it your long-term lucrative activity once you figure out the best strategy for you, right? Let me actually check your questions out there. So I can see Xan, I'm not sure if I pronounce your name correctly, but you mentioned that I discovered that Bitsgap is the way to lose money, lol. All my change percentage is red. So the thing is that you cannot blame Bitsgap for that, because Bitsgap is just the tool for you to use in order to trade. The reason why you have your investment change negative, it's because it was the wrong time for you to enter the market. That basically means that the value of your active trade is losing its value because the base currency is falling, for example. So it's not the blame of Bitsgap, but rather bad market timing you chose at that time, right? So you see, I have here some negative trades, but I hold into them. Well, that's one, actually, it was a random trade I demonstrated on the Binance webcast we had like a week ago or something. But the real one I stick with is the 1H. Why I stick to it? It's because we are at the bottom, and I feel like it's a pretty much justified entry, and the stop loss is pretty close, and I'm confident that in the short-term perspective you should move like this. So that's why I stick with this one, and I am patient enough to see this negative change. Like, I mean, that's okay. The thing is that how you perform in a long-term perspective. Like, I had some trades negative for like a month or something, but in 3 weeks, like in 3 weeks later, it all turned out to be green, right? So it's just that you need to flip strategies from time to time, because sometimes, like for example, in case of Bitcoin, let's say, like right now it's good to stick with the SBOT because that's the sideways market. But once we enter the bullish phase like this, like at some point over here, as we break this resistance, it should be the time for you to enter with the classic bot now, because the classic bot on the rising market actually makes you more money. So you always need to check the current activity of your bots. You need to make sure that you chose the right market timing, and by right market timing, at least I mean that you have your entry price justified in a way that your stop loss is pretty close enough. That way you mitigate the potential loss. So you won't see like minus 30% or something, but you might see just 10%, 12%, which is pretty okay if you have a proper diversification. But that's never a thing to blame on Bitsgap, because Bitsgap, once again, it's just the tool. We give you tools to distribute your investments, to let the bot buy low and sell higher, to achieve this dollar cost averaging effect when the market is falling, for example. That way it mitigates your overall loss, stop loss, and some other tools like you can see here in trading, right? The only thing that you guys need is to know when to use these instruments, because we have several instruments, like the one for the rising market, that's the classic bot, the one for the sideways market, that's the S bot. So it's about your skills, how you perfectly determine the sideways market, the rising market, and get these signals from the market that tell you that the trend is weakening, for example, and maybe it's time for you to actually cancel all your trades to minimize, to secure your profits or whatsoever. So it's just the tool, right? It's not the gold mine or whatsoever. You just need to learn how to use it, and that's my duty here. I do all my best. I give you my strategies. I tell you that you need to try them out in the demo mode before you trade your real money, so that way you get enough confidence, right? And only then you can actually come up with your golden strategy straight away. So that's, I hope I answer your question. Yeah, I see Dao feel like a good comment. Yeah, so exactly, that's not the money bot, like you give it $100 and for sure it's gonna make you $1,000 in a week. No, I mean, once again, the bot is just the instrument, but this instrument cannot predict the market direction, right? It's not the Nostradamus, it's not the Vanga or I mean, no astrology here. It's just the algorithm that buys low and sells high. And of course it has some things like the trading up, the stop loss, and some other things, right? So these are just the tools it follows, right? It never predicts the market, so you cannot blame the Bitsgap if you have a negative investment change. Okay, let's go next. How do you get the red and green boxes on the chart? That's the question from Thomas. So what do you mean by green boxes? Like this one? Or you mean, like, for example, if I go to the spot market and here I have these lines, like the green one and the red line, is that your question, or what do you mean? Green boxes? No, I just don't really understand the question here. Like, these are just the lines that, for example, these are sell orders, these are buy orders, and that's it. Like buy limit, sell limit, that's it. So you can have it like this. That way you can see that your distribution is around 80% in base currency out of your total investment. So let's say total investment is $1,000, and that means that as you enter this trade, you are already exposed to the value of the base currency by 80%. So you already possess 1 inch's worth $800. So that's something that you can see from the chart as you start, but also you can get it here. Like, why am I not able to use it? Yeah, I should go this way. Maybe, yeah, because I have no money on this account, so I cannot show it to you. But anyway, like here you would see the exact split of your investment. To buy anything, and I have returned those right up to now. Yeah, so guys, the way you actually analyze the performance of your bots is just by looking at the column where you have bot profit. Let me actually switch back to my real account, but that way I would have to show you my email, unfortunately, but I don't care. And here we go. So here you can actually see that I have some bot profit. So these are some trades that I've been holding for like 2 months. Most of them are for the sole purpose of just accumulating the base currency, because I launched them on the market downfall. So like you see, it's been trading so long time. Like I started over here, like way back here, it's been falling. So the purpose of this trade was just to buy the dip, right? I did not set these bots to trade on a regular basis as I would do. I just use this bot to capture all this momentum, right? So that's why I have some negative trades. But in general, like if you check other things as well, because as I demonstrated here, like that's not the only strategy I use, because that's just automated bots. I have some hodl coins and I have some small trades as well. So I can show you that on my balance I have some Ethereum, BNB, Bitcoins, and some other coins that I just hodl. So in a long-term perspective, everything plays well here for me. And the only thing to look at when you compare, like when you really analyze the performance of your bots, is just looking at the bot profit, right? So my benchmark per month is 30%. If I see 30% in my bot profit, that's good. I mean, that means that I used the right settings, and pretty much the volatility on the market was enough to let my bot to trade on these short-term swings. Then I just keep with this. I keep these trades further. But I have some trades, like you see, where is this? Like in 10 days, here I made only 3%. I don't like this performance. So I should definitely look at it and figure out why is that. So maybe the grid step is too low. So I need to really check that out. But in general, I have most of my bots doing the right thing, right? So, well, the thing about the poly is that the volatility here is not enough, and the sole purpose of this trade was once again to accumulate some polys as the price of it depreciates. So because I want to hold some polys in my hodl portfolio. That's actually another way for you guys to use automated bots. You can use them as a tool just to accumulate some coins. So the price falls, and you know that the bot is gonna buy. That way it achieves the dollar cost averaging effect, and that way you end up having some coins in your hodl portfolio. So that was the purpose of my poly, right? Actually, I need to switch it off right now. Like I don't need it. Like I'm just gonna cancel all open orders because I just want to hodl some polys. That's it. I mean, that's the thing, right? So that's how you trade. That's how you analyze your bot profit and all that stuff. But you need to know which strategy stands for. Like for example, I have only a few here that I use as regular sideways market strategies, whereas most of the strategies that I have here are just for the sole purpose of accumulating some 0x, dot, right, 1 inch. So these are the strategies that I use just for the accumulation. I'm careless of the change because I believe that in the midterm and short-term, and long-term perspectives, I would see these coins skyrocket. But that's my fundamental anticipation here. So this is how you should use these tools. So what are your preferred exchanges for trading? Like honestly, I prefer Binance because I have everything mostly there. But I also prefer Huobi and OKEx because they have some coins that are not listed on Binance. That's the thing. And another thing is that on Huobi and OKEx you have lower requirements. Like for example, trading Bitcoin to USDT with, let's say, 40 grids, and let's say just 40 grids. So on Binance, usually you need to have at least $500 for this one. But on OKEx, you need like 200, I believe, or something to launch the bot with the same settings. And the reason for that is because on Binance, the minimum trade size, Binance, right, is around $10 per one grid level, right? Whereas on OKEx, it's way lower. Like you can see some limits like $1 only. You can have like $2, but that really depends on the pair that you are trading. So So you need to really figure out what is your list of cryptocurrency pairs that you want to trade. And if you see that it's better to trade Bitcoin to USDT on OKEx compared with the Binance, then go with the OKEx. I mean, that's the logic here. But if you see that there are only few coins on Huobi that you need but are not listed on Binance, then stick with the Huobi, trading these coins. So, I mean, up to 3 exchanges, that's enough for you, I believe. That's the way to diversify as well. What else we got? Is there an optimal amount to put into a bot? Well, I recommend, but like usually you need to have around $300. That's like pretty much the minimum you need to set a comfortable configuration, so that you have enough grid levels and you give the bot enough of the space to capture these market swings, right? Because if your grid levels are too far from each other, then and the market moves within this range, but it never actually touches your grid levels, then what's the point of your bot, right? So make sure that you have enough of the grid levels for the volatility of your selected crypto, and that way you have more chances that your lines will be triggered. This one triggered, this one triggered, this one triggered. So always make sure that you analyze the volatility of the coin. The way to analyze it is, for example, monthly volatility. You can select, let's say, what's that? That's the June, right? Oh, sorry, yeah, that's the June actually. And let's say, what's the volatility of this month from this 22nd of June? Price range. So, well, it was actually around 100%. That's a huge volatility out there. I mean, that means that you can set some wide range grid levels, like with a grid step of 3%, or like that's, I mean, it's still gonna trigger it, right? Whereas you can find some coins that have the volatility of only, let's say, 20%. That way, you cannot afford setting extremely distant grid levels, right? So always make sure that you check the volatility and make sure that it swings enough to capture your grid levels. Yeah, guys, I think that's pretty much it, what I wanted to share with you. Like, once again, to summarize, first thing, define your balance, define your diversification, and how you're going to diversify by these strategies. Like, we got automation on Bitsgap, we got smart trade on Bitsgap, and we got HODL, right? So distribute your investment per each, and define how much you're going to put per each trade within this strategy. Like, for example, $100 per each strategy in automation. So that means up to 5 bots in total, right? Well, that's based on this calculation. So once you define all of this, it's time for you to play with these strategies. And if you are not confident yet in your skills, stick with the demo mode, where you can trade in the simulator. It's pretty much the same, like it mimics the market the same way. So that's the real chart here, actually. It's just that you trade with your virtual money, nothing else. So accumulate enough of the results. Once you are confident in your results, now you can switch to your real account. Now you can trade on your real money. Once, like, you figure out, like, okay, so you started trading your real money. Let's say 3 months passed, and you feel like now is the time for you to reconsider the diversification distribution. For example, now you feel like, I mean, you see that in automation you make more, then maybe focus more on automation. So increase the value here, let's say 60%. You notice that in smart trade, like, you have no time enough for the smart trading, or you have fewer returns there, then minimize your allocation to 20%. So you see, like, the hodl is a good one for you. You can increase it. So until the moment, like, where you find your golden strategy that brings you the most out of the market, like, it usually takes like several months, because you need to test, because you need to take into account the time you can afford to spend on trading, right? Because some tend to spend more time, some cannot afford it because they have a full-time job, let's say, and trading for you is just a lucrative activity. So these are the things you need to take into account, because some strategies like the smart trade, they really require you to look at the market each day, pretty much. If you cannot afford it, or like you are losing too much time on that and you get irritated, then just maybe completely stop trading smart trade mode, or maybe just minimize it down to 10%, whatever. So find your golden strategy, and I gave you just all the tools you need, guys, to really figure out your own golden strategy, and that's it. You can use ready-made strategies. We got the one I just demonstrated. You can watch some previous webcasts to find out the strategies as well. That way you accumulate your knowledge, that way you build your practical skills, and that's the only way for you guys to succeed. It's just that you need to practice, and you got all these tools here on Bitsgap to practice and make sure that you get enough of the money out of the market on a weekly basis. So that's the thing, okay? As of the trading down question, yes, that's the thing under development. That's the first priority thing, I can assure you. So soon you're gonna see the trading down. I hope you are satisfied with this answer. And yeah, by the way, I'm not sure as of now, but most likely we will have a dedicated group of closed product testers, like those who will be testing the trading down. So you can join this group. Maybe not now, but as soon as we figure out the best way how to launch this dedicated group, let's say with 100 testers or anything. So that way we can give you an early access to trading down, for example, or some other products that we are about to launch. And that way you can share your feedback, and that way you can actually make a difference, because that's the only way for you guys to contribute, like trade, speak up, participate on this webcast, write your comments below on the like under the video, like put your thumbs up if you like the video, and all of these things to promote, so that we could have more people discussing the tools that you want to see on the platform, and what are the best options to integrate these tools. So I mean, lots of ways for you guys to interact with the Bitsgap. I mean, that's the aim of Bitsgap, to see you speak up and to use your feedback to bring best instruments that would boost your results and basically increase your flexibility on the market. Okay, so stay tuned, and I think we will have something interesting for you in the very, very nearest future. So once again, I appreciate all of you coming, even though it's been like 10 minutes wasted at the beginning because of some time constraints, but that's on me, sorry for that. And I hope you got some really useful information out of this webcast, and I hope to see you next time. Yeah, so subscribe. We got email digests every week, so stay tuned all the time. Leave your feedback, speak up, and see you next Thursday, I hope so. And I wish you profitable trading, guys. Really wish you, and stay safe. Stay safe, of course. Spend time with your family. Don't get too much into trading, because sometimes you might lose some patience and get irritated. I mean, live your life, okay? It's just trading, okay? If you want it to be your full-time activity, that's another story. But if that's your lucrative activity, like, or a hobby, then like do everything step by step, okay? No rush. Like, you won't be rich in one day. It's a step-by-step process. Okay, find your way, create your golden strategy, and everything is going to be great. So yeah, cheers, peace, love, appreciate, and see you next time.